Mayuresh Joshi of William O'Neill join in as always on every Friday to answer our queries. Okay, gentlemen, good afternoon to both of you. The first query is from Vipul Shah and he is on the line with us. Hi, Vipul.
Hi, good afternoon.
Good afternoon. Tell me.
I'm holding around 100 shares of Blue Star at 687. So now I just want to know the medium-term targets of this and should I hold on for medium-term or long-term is the view I want.
Okay. Mayuresh, has he got it right with Blue Star? Should he remain invested?
Afternoon, Sumer. Afternoon, Mangalam. Yes, I think our ratings are suggested that at this point of time, he can hold on to Blue Star. The numbers were quite reasonable enough. So I think quarter 2, quarter 3, which is one of the weakest quarters because of either monsoons and the winter season coming in, creates some amount of pressure on the EBITDA and the EBIT front, specifically when it comes to the room air conditioner or the unitary products segment. But there again, I think the market share has been maintained at around 12.5%. They've got some further orders in terms of commercial refrigeration is what the management had put forth, both in terms from the healthcare sector and the medical refrigeration part as well. So I think that part of the business is holding up both in terms of market share and the expectations of EBITDA margins being between 7-7.5%. The EMPS segment obviously got impacted because of the pandemic and the slowdown. Order book close to around 650-680 odd crores. The expectations of the metro order which has come through and large commercial projects which will come their way as the unlock activities have started, and the expectations of maintaining EBIT margins between 4-4.5% and also keeping their working capital in check, which seems to be the case at this point of time. An improvement in cash flows with all these elements coming through in the next financial year would reduce their overall net debt to equity from around 1 odd times substantially going forward. So yeah, I think it's a good franchise. The earnings need to improve as per our own O'Neill EPS rating parameters, but he can very well hold on if he's got a medium-term view.
Okay. Mayuresh, what about you? What's your take on Dilip Buildcon and the rest of this infra pack?
No, so there are inherent signs of improvement which are expected to come through now. A lot of management transcripts are pointing that labor has come back to the sites as well, which means that the utilization levels across their projects should start improving. The second element, as Mr. Gadkari had also put out, order flows are expected both on the EPC as well as the HAM front. So I think the IRRs that these orders will generate, the expectations of execution picking up, and therefore I think the cash flow improvement and the deleveraging happening on balance sheets should be very, very evident. For DBL, Dilip Buildcon in particular, I think the monetization of their existing assets, I think that probably becomes key, and the execution aspect of what I was telling about. But yes, I think within the overall space, what we at William O'Neill actually like are stocks like KNR Construction, where the debt equity is probably a little bit on the lower side, working capital days in control, monetization of a few assets in the pipeline at this point of time, very, very strong order book giving revenue visibility. And even something like PNC Infratech, so where I think the 900 odd crore order book that they won takes their order book close to 8,000 odd crores, giving decent revenue visibility for the next couple of years. Good margins, working capital again, very much in control. So if they're able to execute well over the next few quarters and cash flow improvements happen, the EPS and the master score ratings for both these stock look fabulous.
All right, fair point. That's the view coming in on Dilip Buildcon, but can't keep your eye away from the market. Now, we had been seeing some sell-off from the top coming by for the Sensex as well as the Nifty. The frontline indices led lower by the banks, but the mid-cap index, which was holding its head above, both these indices, is now falling in line with the frontline indices. The mid-cap index is almost in the red, had briefly dipped as well. And now there too, the declines are pretty pronounced in a handful of names. Colgate, for instance, at the low point of trade. ACC, the cement stocks have not been doing too well. Max Financial as well has been among the top losers in the last 1 hour. And alongside that, we have names like Adani Power seeing some profit booking, Cadila Health at the low point of trade, and something like Just Dial as well. So the declines are now across the board, and maybe perhaps some profit taking is what we're witnessing as we head towards the weekend. The next query comes in from Vizag. Harish writes to us, holds Vedanta. The stock of his interest is that he wants to know whether he can enter the rally with the stock, and also wants to know a short-term outlook on the stock. So let's start with the fundamental view. Mayuresh, Vedanta, from the whole delisting sort of hullabaloo that took place, the stock has put that behind itself right now. Currently has rallied from levels below 100 to 140 From a long-term standpoint, do you think these risk factors stay, and is it a good bet then?
So, Mangalam, I think for earnings improvement to happen, you probably need to give the company another quarter or two. The reason is pretty simple, I think. Though I think the conversion costs are pretty low at their end, you've also got the added optionality in terms of the pricing actually coming in favor for a lot of these ferrous, non-ferrous companies as well. But I think the overall consistency in terms of demand staying and the execution parameters reflecting on cash flow should be important. Again, the entire delisting saga and what probably happened in terms of the lower levels and the rally that we probably see into the current price, I think my opinion would be to better wait and watch, see how the numbers probably pan out for this quarter at least, and then probably take a call. So I think a wait and watch approach would be better in my opinion at least. But
let's move on to the next query. Then we have Ravi writing to us from New Delhi, holds 5,000 shares of Intellect Design Arena at around 105 odd rupees. Wants to know whether he should hold or sell. Mayuresh, he's making a good 9 lakh odd rupees and bought it at a decent price, held on, is making some profits. Do you think he should continue to hold or maybe book some profits?
Partially, Mangalam, I think some profits can be booked off because I think a lot is now in the price, both in terms of the expectations of the business model changing, the improvement in EBIT margins, the expectations both in terms of cash flows. And therefore, I think the kind of valuations at the price at which the stock is now quoting imbibes most of these factors put together. So I think there's no harm in partially booking some profit and taking some money out of it.